Welcome to Java. Thank you kindly for joining me as always. It's February 3rd, 2025, and it is also Monday. While it might sound a little bit better to have a Tariffs Tuesday, we're going to talk about these nonetheless, just like everybody else. However, I've got a bit of a different take that they have, for the most part, not been speaking about. But in the meantime, we've got Miss Carpenter, and they had the Grammys over the weekend as well, which could not be possible without our wonderful trading partners. This would be China, from where this trophy probably was manufactured, Canada, where she possibly got her jewelry, and Mexico, where her dress was probably designed. So, with all of this, I would like to say thank you for some of my stronger supporters here, especially Shannon. I hope you're feeling better. And Doug, thank you for always being here, as well as Stephanie and quite a few of you. Thank you so much for stepping up and being here. So, let's go into this tariff war and talk a little bit more about it. First, we're going to start with what this has done with the markets and the risk indicator. Now, the MMRI is at 308.8. This a bit higher, was around 3 or 4 on Friday. Now, the marked difference is actually not in the 10-year yield. Now, while the 10-year yield is a bit higher, the true marker here is relative strength of the dollar. It spiked up almost at 110. It's at 109.39 right now because it has pulled back a slight bit. This is a major story. And I'll speak about that in a little bit because that is due to the tariff wars. Now, fear greed in neutral territory. We still haven't had an opening where it has been affected a lot. Still got a lot of people in the markets waiting to see what happens. So this driver right now is indeed fear, as well as a hesitation, trying to see like where the markets head after these tariff effects. Really, what we've got underlying is a major currency shift. So details on that in a bit. We've got cryptocurrencies took a hit on this. Bitcoin spiked down all the way to 92,000, but it seems to have recovered at the moment. We've got it 95,000. Now, with this, there is talk about the chance of it going down to the 75,000 level. There is still that gap fill possibility as these tariffs are kind of hitting everything across the board. However, I don't know that it's time necessarily that it will go down that far. Again, we're going to see how markets react today. Now, we've got the current stock market looking like it's going for a weak opening. Now, volatility index, of course, is up. We've got gold is going to be a strong winner in this as well as oil because part of this is on Canadian oil with the energy. Now, futures looking like this is going to take a hit as well. Now, gold price still hitting a record high and looking like it can continue above 2,800. So looking quite strong. We've also got silver took a slight drop. However, it's still above that $32 level. So silver could really benefit from this as well. Let's talk a little bit more about what is going on with this. So today in the calendar, PMI coming out just after market open. We're going to get some manufacturing numbers, but all of this really is going to be eclipsed by some of these other things going on now. We've got earnings coming out. This is prior to the market as well as prior to the market Tuesday. But what I want to point out is a couple of other things that have been very quietly happening in the background. In the UK, Barclays had issues with their payments. So their payment system starting to lock up. They covered this over and they ended up telling people that if they couldn't get their payments to start talking to food banks, it actually got that bad. So, with this, Barclays having issues now this morning, we're getting reports from Lloyds Bank. Lloyds Bank now also having payment issues, service outages. This is something to keep an eye on because this is a structural issue, not a simple one bank. This is something more happening. So let's go into, and it's not just the UK, they're just the first one to start showing some of these major cracks. Now, I want to talk a little bit more my angle of these tariffs because I think there are some major misses going on in what most people are saying about these. This is more than a simple, we're going to put 25% tariffs on you, you're going to put 25% tariffs on me, and that evens out because that's not how it works, particularly not when you have the world reserve currency still. So they've got all kinds of analyses coming out. Breaking economies could be the first step for the expansionist. It is true there is a bit of expansionist plans in here, but it's different reasons than what people are believing. It's a much more strategic point that is going on here, and I can't stress that enough. We've got two things going on. The first is the expansionism into strategic points globally. The second is because of the first, and they go hand in hand, and this is with the currency shifting. Now, the major currency shift is not just in trade goods that I've been speaking about, but also in the very nature of the currency we're going to have. We know we're going to CBDCs. So we've got President Trump threatening Canada over this, saying that they should become the cherished 51st state. Now, the word is coming out between the three trade partners. First, Canada. Second, Mexico. And third is China. These are for three different reasons. Now, Canada, I believe they do want to make them the 51st state. Trudeau is no longer legitimate leader since he stepped down. So this has opened a lot of doors to what they're thinking of doing now. Mexico is a little bit of a different deal. They hold majority of agricultural products, and they are both reacting very differently than China. So let's go into a couple more of these, and I'll speak about China in a moment. They're preparing their opening bid to talk trade with Trump. Now, this is more on currency issues and the background of chips for trade, as well as artificial intelligence and technology. So it's not so much a goods issue with China. Now we've got Rubio talking about the Panama Canal has to reduce the influence around the canal or face US action. This all ties in. And this Bloomberg story here, the Global Economic Rankings Contest, US tightening its hold on the championship belt, kind of going into their take about this. But the important part is the irrepressible American consumer. Now, the key here is because the irrepressible American consumer has a strong dollar and can continue to purchase because they're bolstered behind, again, with the reserve currency and the inflation that is going on. So, with all of this tying together, what we're heading towards is there are going to be talks going on with a change to these currencies. Now, China has been the first one to go to these CBDCs. They are also the main trade partner within the BRICS system that has the e-currency that they are looking at kind of piggybacking on, if you will, at least initially. So I think that's critical to look at, that this is not just simply a trade war about taxing goods and everything that the others are speaking about. We are looking at the shift into digital currencies with China. They are looking at expanding into Canada, into a strategic area. That is also what Greenland is over, is the strategic positioning that Greenland happens to maintain. So let's talk a little bit about Europe, because we've got German Chancellor Olaf Scholz saying Europe has the capacity to react if Trump follows through with his recent threats uh, with other European leaders. Well, I've got news for Chancellor Scholz because he is going to get hit even harder. Volkswagen has had some very serious issues lately, and the percentage of cars made in Mexico, which are going to suffer from the latest shift here and the tariffs, is Volkswagen. After this, we watched Stellantis take a dip as far as their stock, as well as GM. So with all of these they are going to suffer quite a bit. That it's their main manufacturing in Germany, one of their larger productions, is definitely going to hurt. So with this, we'll see how this kind of wraps out. I think that's going to end up tying them a little bit deeper, unfortunately, into the IMF and kind of bend them to their rule, if you will. So a couple of other things I would like to speak about prior to letting it go with these markets open in a wrap up. Now, the markets are opening weaker. There's going to be a lot of levels that we're watching to see whether this continues. Is this the beginning marker for the drop? Could possibly be. A lot of things have to be broken before they can be fixed with this financially. So we're going to watch that very carefully, but not just the 10-year yield. Keep your eye on the relative strength of the dollar, because the dollar being strong is crushing other currencies. And that really is the wrecking ball. Now, the underlying debt is a large marker, of course, to be watching, but other countries are still putting money and into the bond market, the debt market, if you will, with that 10-year. But that relative strength of the dollar, again, crushing some of the other currencies and markets. Now, with this fiscal wars, we've got the United States did make airstrikes against Somalia. Now, I'm bringing Somalia into this because they're saying Islamic State operatives. At the same time, they're pulling out of Syria, so there's a large shift politically going there as well. Now, this is on a northern area, but there is a lot of negotiation going on now. We've got new wars going on in the Congo, as well as a little farther south in Africa. Now, this is all going to end up being, again, strategic as well as resource issues. Have to be very careful what I say about this. Now, we've got US aid agency in doubt after the website went dark and officials were put on leave. Now, this was a crackdown on this sector, part of it on the spending, but they are also large underliers in what we call the color guard with the revolution. There's a lot of details behind this. Was related a lot with other countries and other things going on. I'll just mention one is Ukraine. So it goes a lot deeper than I would imagine on the offset. So with this, a lot more to go through. I'm going to try to post a little bit more, definitely in Discord if I can. And with that Substack, I'm trying to get a little bit more writing in there. If it would have any readers, not really sure about the reach there. But with this, I wish you guys a wonderful day. And until I speak with you again, stay free.